Welcome to the deep dive. In the crypto world, things move so fast.
Yeah.
It's a real challenge finding projects that are genuinely doing something new, not just, hype.
Oh, absolutely. It feels like every day there's a new coin, a new protocol. How do you figure out which ones actually have substance behind them?
Exactly. And that's what we're trying to do today. We're going deep on the Onyx Protocol and its coin, Onyxcoin, or XCN as most people know it.
Right.
Our mission here is to really unpack it for you, the tech, what it's used for, the economics behind XCN, and look at how it's doing in the market and maybe where it's headed.
Think of it as a quick way to get up to speed on a project that's definitely been making some noise lately.
Yeah, a shortcut to being informed. And to do this, we've pulled together quite a bit: official docs, market analysis, recent news, trying to get a full picture.
A comprehensive look.
So let's start right at the beginning. What is Onyx Protocol, fundamentally? Sources call it a modular blockchain for financial stuff, promising fast confirmations, low fees.
Yeah, and that modular part is important. Think of it like building blocks.
Wow.
Instead of one giant rigid system, it's made of components you can swap or upgrade. For finance, that's huge because regulations change, new products come along.
Also, it can adapt more easily than some older chains.
Exactly. More flexible, more scalable. It's built specifically with financial applications in mind.
And it's not just its own island, right? It's described as a layer 3, using security from Ethereum base Arbitrum. What does layer 3 mean practically?
Right, good question. So imagine Ethereum's the main highway, reliable, secure, but sometimes jammed and expensive.
Yeah, we know that feeling.
Layer 2s, like Base or Arbitrum, are like express lanes built on that highway faster, cheaper.
Okay.
Onyx, as a layer 3, is like a super specialized express lane built on top of those layer 2 express lanes. It's designed for really high volume, complex financial transactions.
Wow, okay, so it gets speed and low cost,
while still inheriting that core security from Ethereum underneath it all. Plus, it's fully EVM compatible. Developers familiar with Ethereum can jump right in. And native bridging makes moving assets across chains much smoother.
So the big picture is borderless finance, cross-border banking, securities, payments, that sort of thing.
That's the vision, yeah, making finance truly global and seamless.
And security-wise, besides leaning on Ethereum and Base, they mentioned this advanced security architecture. Any idea what's under the hood there?
Well, specifics can be proprietary, but generally it means adding extra layers on top of the inherited security. Things like enhanced encryption methods, maybe using multi-party computation for sensitive operations, stricter consensus rules tailored for finance.
So building a fortress specifically for financial data and transactions.
Pretty much, going beyond the standard security model to meet those high financial standards.
Got it. And the fuel for this whole engine is Onyxcoin, XCN. It's an ERC20 token on Ethereum, which is common. But its roles seem quite broad: utility, gas, governance.
Yeah, it really ties the whole ecosystem together. It's not just for paying fees, though that's important. All transaction fees on Onyx are paid in XCN.
And some get burned, right? I saw that mentioned.
Correct. A portion of the XCN from fees is burned, removed from circulation permanently. That creates a deflationary pressure as the network gets used more. The supply can potentially shrink.
Interesting. So it's the gas, it's used for services, and governance too.
Crucially, yes. Holding and staking XCN gives you voting rights and the Onyx DAO, the Decentralized Autonomous Organization. It puts the community in charge of the protocol's direction.
Okay, that makes sense. It's got multiple value drivers then. And it has a bit of history, doesn't it? It wasn't always Onyx and XCN.
That's right. It started life as the chain protocol, focused more squarely on enterprise blockchain solutions.
Okay.
The rebrand to Onyx Protocol and the token changing from CHN to XCM back in March 2022 at a 1.1000 ratio for holders signaled a much bigger ambition.
Bigger how?
Moving beyond just providing infrastructure to building a whole decentralized financial ecosystem, expanding into things like the DAO we just mentioned, advanced staking, even AI, which I'm sure we'll get to. It was like drawing a line and saying, okay, now we're aiming for something much broader.
Right, a strategic evolution, not just a paint job. That sets the stage nicely. So let's dig into how this Onyx ecosystem actually works day to day. You mentioned the DAO. How does that governance function?
It's pretty central. If you hold XCN, you can stake it, lock it up temporarily on the Ethereum blockchain.
Okay.
And that staking gives you voting power. You can vote on proposals about economic changes, protocol upgrades, how treasury funds are used, basically steering the ship.
And didn't they just make a big change to voting? OIP 56, gas-free voting.
Yeah.
Passed in May 25.
Yes. That's a really big deal for engagement, I think.
How so?
Well, normally voting on-chain costs gas fees, right? Little transaction fees.
See, it can add up.
Exactly. And that can discourage smaller holders from participating or just be annoying. By making voting gas-free, they remove that barrier entirely. It makes governance much more accessible to everyone in the community.
That could really boost participation.
Yeah.
Smart move. Okay, besides governance, staking itself is a big feature. Securing the network, earning rewards.
Right. You stake XCN primarily on Ethereum smart contracts to help secure the network and the governance process, and you earn more XCN as a reward.
And they've branched out with staking options too. Something about Earn Network and BNB Chain.
Yeah, they partnered with Earn Network. That opens up staking opportunities on the BNB Smart Chain, potentially with quite high APYs, up to 40% was mentioned, though that always carries risk.
Sure, high APY usually means higher risk.
Absolutely. And they offer different flavors. Flexible staking lets you deposit or withdraw whatever, earning regular rewards. Then there's locked staking, 15-day or 30-day lockups, where you commit your tokens for longer but get higher reward rates.
So options for different strategies. Makes sense. Let's talk interoperability. Onyx is pushing cross-chain stuff. We see bridged USDC, Superbridge. What's going on there?
Interoperability is key for their vision. Bridged USDC is just what it sounds like, USD coin that's been moved or bridged from another chain onto the Onyx network.
Okay.
And Superbridge is the specific technology they're using or promoting for these cross-chain transfers. It's a protocol designed to make bridging assets to Onyx efficient and secure.
And they're even refunding gas fees sometimes for bridging XCN.
Yeah, that's a neat incentive. They have this gas refund initiative specifically for bridging XCN from Ethereum's ERC20 standard to the BEP20 standard on BNB chain. They refund the ETH gas fees you paid.
Huh. That definitely lowers the friction for moving assets around.
Exactly. It encourages users to actually use the cross-chain features.
Now, this next one sounds really futuristic. Onyx AI, or autonomous blockchain agents. What are these? Are they just fancy smart contracts?
They're definitely more than just standard smart contracts. Think of them as intelligent bots living directly on the blockchain.
Okay. How are they intelligent?
Well, unlike a smart contract that just sits there waiting for a specific trigger, these Onyx AI agents can apparently monitor blockchain activity in real time across different EVM chains.
Right.
They can react to complex conditions, execute multi-step tasks, autonomously deploying contracts, moving tokens, managing workflows, all without needing direct human input for each step.
Wow. So they could automate really complex DeFi strategies or processes.
That seems to be the idea, making decentralized systems more dynamic, responsive, and potentially much more scalable by automating these complex on-chain operations. It's pretty cutting-edge stuff.
Definitely sounds like it. And beyond the core protocol, there's a whole suite for developers and businesses. Thirdweb, Chain, Onyx Cloud, Sequence. Can you quickly break down what each piece does?
Sure. Think of it as a toolbox. Thirdweb is aimed at developers. It provides tools and frameworks to make it easier to build, deploy, and manage dApps on Onyx. Less complexity.
Okay, simplifying development.
Chain, the original entity, is still around, focusing on providing blockchain infrastructure specifically for institutions and big commercial clients.
Right, the enterprise angle.
Onyx Cloud is interesting. It's like offering blockchain as a service. Companies can use it to build and run their own private, independent blockchain networks, but using Onyx's tech underneath for financial services.
Like a private permission chain built with Onyx tools.
Kind of, yeah. Tailored for specific business needs. And then Sequence is a ledger as a service. It helps businesses manage tokenized balances easily. There's also Sequence NFT for handling NFT projects from start to finish.
Now, I noticed some of these, like Sequence, have premium options paid in XCN.
Exactly. That's key, tying the utility of these enterprise services back to the XCN token, creating demand for it beyond just speculation or gas fees.
So a really comprehensive stack from individual users up to large enterprises. And if someone listening wants to actually use the Onyx network, say add it to their MetaMask or another wallet, is it standard?
Yep. Pretty standard process for adding a custom EVM network. You just need the right details.
Which are?
Network name is Onyx. The RPC URL is https://rpc.onyx.org. Explorer is https://explorer.onyx.org. The chain ID is 80888, and the currency ticker is, of course, XCN. Plug those into your wallet, and you should be good to go.
Okay, simple enough. Let's switch gears now to the economics of tokenomics supply, how XCN is structured. What's the headline on supply?
The big headline is, it's fixed, permanently. The total supply is set at 48,470,523,779 XCN. No more can ever be minted.
So it's deflationary through burning and inflationary impossible. Scarce by design.
Exactly. Makes it a scarce digital asset. The precise max supply figure often quoted is of 48,402,437,326 XCN.
Okay, slightly different numbers, but the point is fixed max supply. How much is actually circulating now?
As of early August 2025, the circulating supply was around 34.53 billion XCN. That's roughly 71.34% of the maximum supply already out in the market.
So over 70% is circulating. Where's the rest held and how does it get released? The vesting schedules.
Good question. The allocation is broken down. About 48.4% is earmarked for staking rewards. That's nearly 23.5 billion XCN.
Okay, the biggest chunk.
Then 30.9%, or 15 billion XCN, is held by the foundation. And the remaining 20.6%, 10 billion XCN, is in the DAO treasury.
And how do these get released? You mentioned vesting.
Yes, and much of it uses cliff vesting. That's important because instead of a slow trickle, tokens become available all at once after a certain period.
Ah, so potentially large amounts hitting the market periodically.
Potentially, yes. These unlocks can be significant supply events. For instance, the Foundation's tokens vest over 75 months, releasing 200 million XCN each month. The DAO treasury vests over 100 months.
So this release schedule goes on for years.
Absolutely. The full schedule stretches out into 2030. And the next unlock mentioned in our sources is actually quite soon, August 15th, 2025, releasing tokens to the DAO treasury.
Okay, that's something market watchers will definitely note.
Yeah.
Has history shown these unlocks cause big price drops?
It's interesting. The data suggests relatively low volatility in the week after past unlocks, but, and this is a big but.
Always a but in crypto.
Right. Past performance isn't predictive. The actual impact really depends on who gets the unlocked tokens. Are they long-term believers or just looking to sell? And crucially, what's the overall market mood like at that moment? An unlock during a bull run might be absorbed easily. During a bear market, maybe not so much.
Makes sense. It's context dependent. Okay, let's pivot to the market itself. Performance, future outlook. What's the current state of play for XCN? Price, market cap.
As of our data point, August 4th, 2025, the price was hovering around Avaro 0.014648.
Okay.
Market cap has bounced around quite a bit looking back from February to June 2025. It was anywhere between roughly $500 million and nearly $1 billion, let's say 500 million to 959 million USD.
So decent size, but variable. And it's ranking.
Yeah, reflecting that variability, its CoinMarketCap rank has generally been somewhere between, say, hashtag 80 and hashtag 111 in that same time frame.
It's had some strong runs in the past, though, hasn't it? I remember seeing headlines about a big surge earlier in 2025.
It definitely has. It went from way down at SOAR 0.002 UN up to almost 0.5 earlier this year. And maybe more impressively, after that rebrand in March 2022, it actually hit a new all-time high.
Right when the rest of the market was struggling.
Yeah, while the broader crypto market was generally heading downwards, that suggests some strong project-specific momentum back then.
But context is everything. That all-time high was around 0.18 cents, and the current price is, well, over 80% below that.
82.51% down, according to the numbers, which, yeah, just underscores the massive volatility inherent in this space. Very few coins stay near their peaks for long.
So what's the general feeling, the sentiment around XCN right now?
Technical analysis pegs the current market sentiment as neutral. The fear and greed index was at 53, which is right in the middle, not extreme fear, not extreme greed.
And any short-term technical levels people are watching?
As of June 2025, it looked like the price was consolidating, kind of stuck between 0.0165s on the low end and 0.0221 cents on the high end.
Okay, a range,
Yeah. So breaking above 0.0202 would be seen as bullish, a potential sign of more upside. Falling below 0.0165s, conversely, would be bearish, maybe signaling further drops. Immediate support zones were seen around the 0.022 to 0.025 area.
Got it. Classic support and resistance watching.
No.
The crystal ball section, price predictions, and we have to hammer this home. These are algorithmic guesses based on past data and technicals. They're absolutely not investment advice, pure speculation.
Couldn't stress that enough. Highly speculative. Treat them as just one data point among many, and a very uncertain one at that.
Okay, disclaimer delivered. What are these algorithms predicting, short and long term?
Well, interestingly, the very short-term forecast mentioned was actually bearish, predicting a potential drop of around 25% down to maybe 0.010948 by early September 2025.
Huh, okay. So immediate downside predicted there. What about further out, rest of 2025 into 2026?
Looking through 2025, the predictions suggest trading mostly within a channel, between roughly 0.0 cents and 0.0147. Sentiment might fluctuate month to month, bearish for August, maybe bullish later in the year, potentially offering some percentage gains like 18-24% ROI if those year-end targets hit.
And 2026.
The outlook for 2026 seemed more consistently bullish in the predictions, with an average price target around 0.0226. There was even a potential peak predicted near 0.04 cents in May 2026, which would be, a significant jump, like 177% from the current price.
Okay, so the models see potential growth over the medium term. What about way out, like 2030?
By 2030, the predictions get much more ambitious, suggesting significant growth. A potential high target was around 0.0635, which would be over 300% gain from today's price.
And the $1 million question, or maybe the $1 question, do these models see XCN hitting $1?
According to the algorithm cited, no. It doesn't predict XCN reaching $1. The highest price foreseen, even looking out as far as 2050, was around $0.46.
Interesting. So the model suggests growth tied to utility and adoption, maybe, rather than purely speculative mania reaching dollar parity.
That could be one interpretation, yeah. Steady growth rather than exponential moonshots. But again, these are just model outputs.
Absolutely. So beyond algorithms, what are the real-world factors that actually drive XCN's price? What should people really consider?
Well, the basics, of course, supply and demand. But specifically for Onyx, protocol updates are huge. Things like that. OIP 56, gas-free voting, successful implementations boost confidence and utility.
Right.
Regulations are always a factor in crypto. Any changes could impact it. But maybe most importantly, adoption. Are companies, institutions, maybe even governments actually using Onyx's technology, its cloud solutions, its payment rails? That real-world usage is key.
And because it's still a relatively smaller market cap coin compared to, say, Bitcoin or Ethereum, whale movements matter too.
Definitely. Large holders or whales can have an outsized impact on the price, especially with thinner order books. Their buying or selling can move the needle significantly.
So, wrapping up the investment considerations, its current price is way off its all-time high. Could be seen as an opportunity, could be seen as a warning sign of volatility.
Right. But underpinning that is a solid technological foundation, clear use cases in finance, developer tools, AI. There's substance there.
And we are seeing growing market adoption. Judging by trading volumes increasing and getting listed on more exchanges, that indicates growing interest and liquidity.
Those are positive signs for project health, yeah.
And if listeners are interested, after doing their own thorough research, of course, where can they actually acquire XCN?
It's pretty widely available, actually. You'll find it on most of the major exchanges. Coinbase, Kraken, Binance, KuCoin, the big names.
Good.
Platforms like Bitunix are also mentioned, offering deposits via USDT or fiat on-ramps using things like Apple Pay, bank transfers, credit cards through third-party providers.
Like the Tap app.
Yep, the Tap app is another option. Lets you buy or sell using either crypto or fiat balances, supporting bank transfers and debit cards too. So plenty of avenues.
Great. Well, that brings us near the end of this deep dive on Onyx Protocol and XCN. We've covered a lot from its Layer 3 architecture aiming to shake up DeFi
to the multi-purpose XCN token powering it all.
In this whole expanding ecosystem with DAO governance, AI agents, enterprise solutions, it's definitely trying to bridge robust tech with practical applications.
A complex project with serious ambition, for sure.
Indeed. So to leave you, our listeners, with something to chew on, here's a final thought. Onyx is clearly pushing on two fronts. One is decentralization and community power with things like gas-free DAO voting. The other is real-world traditional finance integration via its cloud infrastructure and enterprise tools.
Two major pillars.
So the question is, which of those two aspects, the success and engagement driven by things like accessible governance or the successful adoption by traditional finance using its infrastructure, which one do you think will ultimately be more critical for determining XCN's long-term value and its real impact on how finance evolves?
That's a great question to ponder. Where will the biggest impact come from?
Something to think about. Thanks for joining us on The Deep Dive.